Welcome to another video of this technical analysis course. In this video I want to bring everything we've learnt together to give an example of a trading strategy. This strategy I've put together in about 5 minutes, so it hasn't been back tested and I don't recommend using this strategy, but it will act as a good example of what a trading strategy may be like. So I have 3 moving averages. I have a 15 moving average, which is this green moving average here, and I have a 25. When the faster moving average, the green, is above the slower, I'm looking for opportunities to go long, and when the red moving average, the slower moving average, is above the faster, I'm looking for opportunities to sell or go short. But I have a number of signals or confirmations I want to be in place before I simply just open a long or short position. Firstly, I have this longer term moving average, which is a 100 SMA, and that signals the longer term bullish or bearish bias. So apart from this moving average cross, one moving average being above the other, price also needs to be above this 100 SMA for long positions and below it for me to open short positions. I also have a stochastic, and I have the overbought and oversold zones marked. This will be another confirmation for me before I open a position long or short. Price has to be either overbought or oversold. And then finally, I'm waiting for a pullback after a push and an engulfing candle or pin bar on the pullback. To summarize all that, I'm looking for a pullback of a trend with the corresponding overbought or oversold, and all 3 of my moving averages to agree. So our first trade is here. We've had a push on the upside and we're pulling back. So I'm looking for a pin bar or engulfing candle. Price is above the longer term moving average, so my first confirmation or signal is there. My moving averages have crossed and the green is above the red, so it's a second confirmation, but currently I'm not showing as oversold on the stochastic. Price continues its pullback, and now I'm shown as oversold. There's an engulfing candle here. All my signals and confirmations are affirmative, so that's my signal to go long, and I'm looking to close when these moving averages recross and price could move on the downside. So we would open here and close right here. This is a pound against the dollar, and we would have made about 420 pips. Okay, let's carry on with this strategy. The moving averages have crossed, but we're currently on an uptrend and we're above the longer term moving average, so we can't go short. We have a pullback here. This could be an opportunity to go long. Our moving averages agree, we're above the longer term moving average and we're showing as oversold. And we have an engulfing candle, so we could go long again there. It's likely we would have made a small loss. Price then comes on the downside. Our moving averages cross, we have this push, we have a pullback, but price is above the longer term moving average, so we can't go short until here when price comes below, and that's an engulfing candle. We're showing as overbought, so that's a signal to go short, and we would close right here when the moving averages cross. And we could continue to go through this chart and pretend to make trades. You know, that would have made us about 100 pips. And there are trades all over the place. There's another good one here. Our moving averages have crossed. Our fast moving average is above the red or slower, so we're looking for signals to go long. We pull back here, we're above the longer term moving average, we're oversold, engulfing candle, another opportunity to go long, and we cross here. That's another 300 pips or so. Now, like I said at the beginning of this video, I'm not suggesting you trade this strategy. I've purely put it together in a few minutes, but this is a good example of a technical trading strategy that involves price action, chart indicators for confirmation, and a set of moving averages.